Are you tired of losing money in the Forex market? Well, great, because in this video we will be discussing a proven day trading strategy that is suitable for traders of all levels. Whether you're a total beginner or an advanced trader, you will definitely find value in this video. The video is kind of long, so to make it easier, I've split everything in sections and time-stamped everything on YouTube. So let's first identify key concepts for this day trading strategy. Key concept number 1, support and resistance. So support and resistance levels form because of collective actions of investors and traders. So we have a resistance zone over here and a support zone here. Now it's basically supply and demand. People buy over here because they believe the price is cheap. Currently for Euro US dollar, they wait for the price to move up and take their profits just over here because previously this area zone has been a sell-off. And it works both ways because when buyers take their profits, a lot of sellers over here believe the price is too expensive now and could short a trade down. That's why we see a nice drop off over here from the resistance zone straight to the support level. Understanding support and resistance is crucial when Forex trading. Without it, you won't know where you should close off your trade and where you should take your profit. Super important, don't skip it. So key concept number 2, moving averages. I love using the moving average indicator. This is the one I use, and I mainly use 2 of them, but sometimes I use 4. So here's all the periods I use for the moving averages. Period of 20, period of 50, period of 100, and period of 200. Moving averages is a trend following indicator, and in my opinion, it's crucial to have it on your charts when day trading. Here's an example of me using 20 and 50 moving averages to understand the market. Candlesticks are currently respecting the 20 moving average, and we can see it just over here a couple of times. When moving averages are below the candlesticks, it shows a buying opportunity. Now I wouldn't buy straight away. That's why we need to add the support and resistance levels. So we can identify our first one just over here. I would say a previous low over here as well seems reasonable. Now we just need to wait for a break and then we could enter the trade. So let's see, breaks going towards the upside nicely. This could have been a potential entry long. Now, of course, these are very simplified examples, but we will get to the advanced stuff a little bit later. So key concept number 3 is candlestick patterns. So let's start with my favorite one, the bullish engulfing candlestick. Every time you see the blue candlestick swallowing the red one, it's usually a great candlestick confirmation to enter the trade as a buy. So let's just see what would happen. Buying, and it does go towards the upside, and vice versa for a short trade or a sell trade. It would be a bearish engulfing candlestick where the blue candlestick gets swollen by the red one. It's a great indication to sell or go short. So let's see, and it would be a nice and profitable trade. Now another candlestick I love to enter on is a bullish hammer. It's only one simple candlestick, yet it does the job. So if we entered over here, this would be a nice little trade towards the upside following a nice bullish engulfer candlestick. Now for a bearish scenario, we have this beautiful candlestick over here, but it's not a hammer anymore, it's a shooting star, and it's also a great candlestick confirmation. A shooting star usually predicts some sort of trend change, so I usually use it when there's a strong resistance. I see a shooting star, could be a nice little pullback trade, and you take this trade short. So let's just see what would happen. And it does drop towards the downside nicely. Nice little reversal trade. Now there's a few more, however I rarely use them, and because I rarely use them, I'm not gonna put them in this video. And the last key concept is trend. So as you can see, this is a trend towards the upside. We can see the trend confirmed with a bullish engulfing candlestick as we discussed earlier. So it should be going towards the upside, and it did. After this huge volatility spike, where did it bounce off from? Well, if we just extend our trend just a little bit, it bounced off the trend, right? So it's a great little indication where the market is heading. If the trend is not broken, likely a continuational move towards the upside in this case will happen. So every single time the market touches the trend, it should actually react positively or negatively depending on the market direction you're trading. And you could have done the same thing with the downtrend. Look at this. just drawing it over here. Nice little respecting downtrend. Look, respected it just over here, went towards the downside, respected over here, went towards the downside, and eventually the trend was broken with a huge push towards the upside. Now, squeezes like that in simple terms is support and resistance sideways. That's all it is. There's nothing complicated about it. And the price level is squeezing. As we can see, it just gets tighter and tighter before eventually just breaking past towards the upside. And after the break, it just shows where the market is likely going to be heading next. And then you could be looking at the higher time frames, which we will discuss later in this video. Okay, now let's combine everything we learned and identify some trading opportunities. So we're currently on Euro USD 5-minute time frame. We have this nice little resistance area, and we also have a supported area as well. We could potentially draw a trend line over here. It makes sense. And we also could use a flat top bottom just over here. We can see the squeeze. And if we just drag this along, we can see the supported area just to make things a little bit cleaner and clearer. Now, even though the market is currently clearly developing some lows just over here, it does not matter because the overall market direction at the moment is very bullish. We can actually just see that we had a nice push towards the upside over here. Huge push, no consolidation, no support and resistance in that area. Went towards the upside and developed a nice support and resistance level over here. If the trend is strong, after consolidation, there should be a breakout towards the upside if we get a confirmation. Now, since we are currently on a squeeze pattern again, what happens? The price gets squeezed. It's gonna pop like a champagne bottle, either towards the upside or the downside. In this case, because we got a bullish engulfing candlestick just over here and another one right beside it, already confirms the trade is great. We also had this huge wick, which means the price tried to break the previous support level. However, it failed, which means bullish pressure is definitely here and we are expecting a move towards the upside. So you could potentially long this position for a nice day trade. I would say 12 pips is good enough. Stop loss just below the previous wick just to not get stopped out just in case the market does dip down. And I feel like we should target a breakout. So 12-12, 1-to-1 risk reward is great. So now let's just see what would happen. And it does go towards the upside and it reaches our take profit level. This trade is great, but what else is super important? We recently had the break of structure, right? This was previous resistance and this candlestick actually managed to break resistance, which now means resistance becomes support. And if we get a candlestick confirmation, we could enter yet again. Now, these two red candles doesn't say anywhere that we should enter a long trading position. So we need to wait for a better entry opportunity. Let's do that. Let's wait and see what happens. So we get a bullish engulfing candlestick and it's actually a perfect one. No wick of the previous resistance zone, which now is a support. We know that the overall trend direction is bullish. We can enter the trade long. So we could now enter on a bullish engulfing candlestick just off here. This seems like great price action, but I'm just wondering, have we missed something? What about the moving averages? Where are they? There's a reason why I didn't show you them first. Now let me add them to the chart. So here's the 25 and 50 moving averages. And as you can see, 12 pips is great because it covers the two moving averages. You always want to cover the moving averages with your stop loss level. Let's say we didn't have them, you could potentially have a very tight stop loss. And if the market just moves a little bit down to retest the moving averages and you didn't know that because you didn't have them on your chart, you get screwed, you get killed, you get knocked out, your account blows up, and you are sad. Now, because you're not an idiot like myself, you will probably have the moving averages straight away telling you how much stop loss you should have, which can also tell you, is the risk reward worth it? Imagine the moving averages were somewhere far away. Well, it wouldn't make sense because we would have stop loss of around 25 pips, and if we're aiming for 12 pips take profit, that's not going to be great unless you would be aiming for 25 pips, which is not too bad for day trading. But just imagine it would be 50 pips stop loss and you're aiming for 25 pips straight away. Not great risk reward. you wouldn't be taking this trade because of the logic. If it pulls back towards the moving averages like they do most of the time, you will get screwed. Okay, now let's just see how the trade performs with the 2 moving averages in place. And it does shoot towards the upside very nicely, and the moving averages follow. So when the trend is steeply heading towards the upside, you can actually make a lot more money. And here's a moving average I haven't mentioned. It's the 9 moving average, and it's great with breakouts. When it breaks out and the market is steeply going towards the upside, the candlesticks usually respect it, and you can just make a ton of money. Just look at this. So from 12 pip trade just over here that we initially set, if we just waited another 5 minutes, we got a bullish engulfing candlestick closure. Once again, you could have potentially entered again, or you could potentially just carry on making money. Look, so it goes from 12 pip trade to around 53, 55. And this is a great risk reward straight away. 4.5 risk reward over here. Now I would recommend closing it at 4.5% risk reward, but if you want to go crazy, then just wait until 9 moving averages cross back down, and then you can kind of close off your trading position to maximize your pip gain. So let's see if that happens. So yeah, we do get a closure over here, closure. So from 12 pips, you would have gotten 29, nearly 29 pips take profit. So that's double the amount you initially risked the first time, just using the 9 moving average as a great kind of momentum indicator. If the momentum is strong, it's pushing it, it's going to respect it. And if the momentum is slowing down little by little and it crosses the 9 moving average, you can close off your trading position. All right, now let's go really in depth for a sell trading scenario, and I'm going to show you a few more tricks that I haven't showed you previously. A bearish engulfing candlestick and a shooting star at the same time. Obviously, the red candle is swallowing the blue one, which shows great price action. What else is important? We just recently crossed the 50 moving average, already a great sign to go towards the downside. So we could potentially try to enter a short trading position. So look at this, a nice 10-10 stop loss and take profit level, bearish engulfing candlestick covering the 2 moving averages on the 5-minute time frame for Euro US dollar. Let's see what happens. So it does dip down and pulls back. Where? To the moving averages. Now that's interesting, right? Because it's forming a nice little trend over here straight away, and we can actually spot now a squeeze pattern. So what happens after the squeeze? The champagne bottle, do you remember? It's gonna pop. Whether it's the upside or the downside, we don't know, but it's gonna pop, and the price is currently getting squeezed. Now to gain some confidence for this trade, because we're currently in a squeeze, we need to add a few more moving averages. So the 100 and 200 is currently on the charts, and we can see that 200 period moving average actually has been broken towards the upside. However, we have a trend towards the downside. That doesn't matter. Plus, I only use the 100 and 200 moving averages on a little bit higher time frame. So I keep my entry moving averages, which is the 20 and 50 moving averages, on the 5, but at the 15-minute time frame, I make sure I have my 200 and 100 moving averages, in this case above the candlesticks, to confirm bearish pressure. And as you can see, 200 and 100 moving averages just over here confirms a nice selling trend, and 20 and 50 moving averages currently getting a break on the 15-minute time frame, maybe even a bearish engulfing candlestick closure. This straight away tells me that the trend is definitely down, and we should see some form of down pressure. So let's see what happens, and straight away shoots towards the downside after that 15-minute bearish engulfing candlestick closure. So what I'm saying to you is use multiple time frames. Don't stick to one time frame only. Don't stick to the 5-minute time frame and forget the 15-minute, maybe even an hour time frame, to understand where to set up your take profit and stop loss levels. And once again, you can use the 9 moving average as your little indication where to kind of close off your trading position. In this case, you would have probably closed it at 15 pips, just because there is a clear support level over here. We can see it even on the 15-minute time frame, right? You should be aiming to close off at that position, because that's what we were discussing earlier on, right? Support and resistance, supply and demand makes sense. Here's a powerful tip, and it's about mental preparation. So when day trading, always ask yourself, How do you feel? Do you feel up for the challenge ahead? Because that's what trading is like. It's a challenge, and trust me, it will be stressful. So if you're feeling angry, sleepless, your child's in the room screaming or something, don't fucking trade. I'm serious. You will lose money 100% guaranteed, tried and tested by multiple people around the world. And with that being said, I'm heading out, so make sure to join our trading community. We are absolutely dominating the markets. You can learn a lot from us. And if you enjoyed this video and want to see more, make sure to click the playlist over here. You will learn a lot.